So guys, we spoke about the concept of required rate of return the other day. I said required rate of return primarily depends on what? The risk-free rate that is prevailing in the economy, guys, and the risk premium that you're supposed to get for the risk that you are undertaking. Ankit, meet me after the class. Yeah. So it should depend on both risk-free rate as well as the risk premium as beta that you're supposed to realize. Now risk-free rate beta I said will depend on primarily based on inflation rates prevailing in the economy as such, guys. Otherwise interest rates can also be affected by the demand and supply of money. After that, risk premium, guys, will depend upon the risk that you're undertaking. We took the example of credit rating with a AAA, AA and A rated companies. I said AAA rated companies are the least amount of risk, AA rated companies have a little higher risk, and so on. So if you're investing, guys, in a lower risk entity, you will be expecting a lower return. If you're investing in a higher risk entity, you will be expecting a higher return. Likewise, but when you're investing your money in equity shares, you end up taking a higher amount of risk in comparison to debentures. So you will also be expecting a higher return from equity in comparison to debt. Under equity also, guys, I said that entities can be segregated into large cap stocks, mid cap stocks, small cap and micro cap. You will be expecting the least amount of return as beta from large cap stocks because the risk is comparatively lower. From small cap beta, you will be expecting smaller return. You will be expecting a higher return as such, guys, from uska answer dekho, small cap smaller return karte, large cap large return. From small cap entities as such beta, you will be expecting a higher return, guys, because the risk is higher. Then beta, what was the concept of nominal rate and real rate? Nominal rate is inclusive of the inflation component. Real rate is such beta excludes your inflation component. In order to arrive at your real return using the prevailing interest rates and inflation rate, what should you do? 1 plus nominal interest rate will be equal to 1 plus real rate into 1 plus inflation rate. Whatever are the prevailing interest rates, that will always be your nominal interest rates. They are not going to be your real interest rates. All right, kids. Right, the next heading better, time value of money. Time value of money. Now, I already spoke about the purchasing power of money better the other day. I said because of inflation, the prices of commodities will keep increasing year after year. And if the price of commodities are increasing, you will not be able to maintain your purchasing power with the same amount of money. We took the example of 1000 rupees the other day, remember? If the price of some commodity beta is 1000 rupees today on a per kg basis, after a year, if it turns out to be 1060 rupees per kg, and you still have only 1000 rupees, will you be able to buy the same quantity of goods? The quantity of goods that you're going to buy beta will definitely reduce. So if you get some money, if you earn money as such beta and you just put it in your house without generating any return on it, what is going to happen to the value of that money? It is only going to decrease year after year if you do not deploy those funds as such, guys. To compensate for this decrease in purchasing power of money, guys, we have the concept of return. The whole reason behind investing your money as such beta is to ensure that we generate a return more than the inflation rate. If you are generating a return more than the inflation rate, you will be able to maintain your purchasing power. If you are generating an excess return more than your inflation rate also as such beta, then the real increase will be there. You can increase your purchasing power. Just say if the inflation rate is only 6%, but if you have generated a return of 20%, don't you think you will be able to buy a much higher quantity of goods next year? So objective is to ensure that you get remunerated for the decrease in purchasing power. That remuneration for decrease in purchasing power comes in the form of return. As of now, let us term it as interest. Not always beta, the return will only be in the form of interest. Just a couple of us beta invest in commodities like gold and silver to beat inflation. Don't you normally see this in the news beta? That some part of your investment should be made in gold and silver to beat inflation. Because historically as such beta, the gold prices and silver prices have been in line with the inflation. Higher the inflation, higher will be the increase in the prices of these commodities. So वहाँ पे you are not getting return in the form of interest. That is only in the form of capital appreciation. You buy silver, say beta, for example, at 92,000 rupees today. If the price of silver turns out to be 1 lakh after a year, That difference 8,000 that you are making, will you be terming that as interest? That is merely capital appreciation. Are we clear? So under interest, guys, there are two ways of computing interest. Interest is a basic remuneration for decrease in purchasing power of money. We have two methods of computing interest. Correct, beta Nimit? Nimit ko pooch raha hu. Yes, beta. What are the two methods? Yes, beta. That is what I was talking about. Very good, beta. Huh. There is simple interest, guys, and then there is compound interest. Now, Nimit, what do you understand by simple interest? Simple interest is an appreciation on, huh? Under simple interest, beta, we always keep computing interest only on the original principal. If you have deposited a sum of rupees 1,000 at an interest rate of 10%, the interest amount for the first year is supposed to be 100 rupees. Let us say you do not withdraw this amount. If you do not withdraw interest for the first year, what should be the balance lying with the other person? 1100. In spite of the balance lying with the other person, beta, is 1100. For the second year, you will still get 10% on what amount? 1,000 rupees. You will not get 10% on 1100. So that will still be 100 rupees. Now, even if you do not withdraw this as such, beta, what is the accumulated balance with the other person? 1,200. Now, you will still get interest only on 1,000 rupees for the third year as well. The story continues like this. So even if you're not withdrawing your interest income as such, beta, the return that you're getting in the subsequent years is only on the original principal amount. It is not on the accumulated balances. That is why it is called as simple interest. The same thing, beta, if it was compound interest. Under compound interest as such, beta, interest will always be given on the accumulated balances. So you have deposited 1,000 rupees. You are supposed to make an income of 10% on that in year one. How much will that be? 100. Your accumulated balance will become 1,100. If you're not withdrawing anything as such, beta, for the next year when they give you interest, that will be on what amount? You will get an interest income of 110. For the next year, beta, when they're giving you interest income, that will be on 1210. You will get 121. And it will continue like this. So under compound interest as such, beta, you always get interest on the accumulated balances. Under simple interest, interest is always paid on the original principal amount. Are we clear about this? Now, if there is a debenture with a face value of 1,000 rupees, and let us say, beta, that the coupon rate is 10%. Interest rate on this debenture is 10%. Every year you will get an interest income of 100 rupees. The company is going to pay out 100 rupees to you every year. The maturity of this debenture is 5 years. At the end of 5 years, beta, you will get back your 1,000 rupees. Whatever was originally deposited. You're going to get an interest income of 100 rupees every year, and at the end of 5th year, you will get your original principal of 1,000 rupees. Ankit, is this simple interest or compound interest? Simple interest. Simple interest. So this is compound interest, guys. Now pay attention. The whole concept of simple interest and compound interest works if you do not withdraw your interest income every year. Isliye I've been stressing, guys, on that point. Consider that you do not withdraw your 100 rupees at the end of first year. Only then the accumulated balance with the other person will become 1,100. Simple example. I give a loan of 1,000 rupees, guys, say to Nandini. The interest income for the first year is 100 rupees. She gives me that interest at the end of first year. What should be the balance lying with her? 1,000. Why will she give me interest on 1,100 in the next year? Did she not pay me interest at the end of first year only? Yes or no? Interest was given to me at the end of first year. She will not give me interest on 1,100 for the next year, even if this was compound interest. At the end of second year again, beta, is she giving me 100 rupees? Yes or no? What is the balance lying with her? 1000. For the third year, she is not supposed to give me interest as such, beta, on 1100. She will give me interest only on 1000 rupees. You take a loan, housing loan, beta, say of 80 lakh rupees, you end up paying a principal of 20 lakhs. Will they charge interest on the original 80 lakhs only, or will they charge interest on 60 lakhs? Why the hell will they charge interest on 80 lakhs? Yahan pe imagine guys that instead of she giving me 100 rupees, she is also repaying a principal of 200 at the end of every year. There are few debentures beta where principal is repaid every year. Amortization. So first year they are giving me an interest of 100. They are also giving me 200 rupees towards principal. Alright. Now what is the balance lying with the company? 800. On what amount should they be giving me interest for the second year? Why the hell will they give me interest on 1000 or 1100 or any other amount when the balance lying with them is only 800? No doubt about it that the amount of interest income is remaining constant. But do not forget that you are realizing cash flows every year. You cannot consider this to be simple interest. Or think better in a different way. Can you deposit this 100 rupees elsewhere and start generating income on it? I give 1000 rupees to a company. They're giving me how much better at the end of first year? 100. This 1000 rupees continues with the company. I deposit this 100 rupees elsewhere. In the second year, my total income, will that be on 1100 or will that be only on 1000? On 1000 rupees, I will get return from the company. This 100 rupees I'm depositing elsewhere. Will I start generating return on that as well? Am I in a situation to generate income on income? There is reinvestment coming into picture here. Though no one talks about simple interest and compound interest here, but this is definitely not a case of simple interest. We talk about simple interest and compound interest only if you are not withdrawing your money. If you do not withdraw your money, how is interest computed for the subsequent period will determine whether it is simple interest or compound interest. Are you getting the point, guys? Yes or no? अभी कल एक डिबेंचर का भी बता रहा था ना यार, अभी भी ओपन है क्या? हाँ, 1 second guys. When they're offering as such guys an effective yield, 1 second. हाँ. If I take an example of series 7 guys, वो दिख रहा है series 7? Do you see series 7 there guys? So is it cumulative or is there any income being paid? Cumulative. If it is cumulative as such guys, the accumulated balance is 1423. That is more than 13.303% as such beta, because they are compounding it every year. How will they get that 1423.83? On 1000 rupees they will add 13.03% for the first year. For the second year again they will add 13.03, but on what amount? Accumulated balance. Why on accumulated balance? Your interest income is not being paid out to you. Your interest income is being accumulated with the company. समझ में आ रहा है नहीं आ रहा है? But in the first case as such guys, same अगर monthly payment कर रहे हैं वो लोग, can you see series 3? Yes or no? They are offering you a coupon of only 12% as such better. They are not giving you that 13.03% or whatever, because they know that you can invest that money elsewhere and still generate return on return. So when will you talk about simple interest? ये example में वापस आऊँगा बेटा, when I do effective rate of interest. अभी के लिए when will you talk about simple interest and compound interest? Only when the cash flows are not being distributed. If the cash flows are being distributed as such guys, then by default it is compound interest. You do not make a reference to compound interest, but logically socho, you will be able to invest that money elsewhere, and that is why you will be able to compound your income. If you're able to compound your income guys, it has to be a case of compound interest and not a case of simple interest. Are we clear about this? Yes or no guys? Now before I make you write notes, there's also something called as flat rate and diminishing rate. Not relevant for syllabus. Long back it was given once in bond valuation, but we should still know all the concepts of time value of money guys. Ever heard about the concept of flat rate and diminishing rate? Flat rate beta is usually used for personal loans and auto loans के साथ बेटा ये जो ऑटोमोबाइल के लोन्स होते हैं given by the smaller NBFCs, they use the concept of flat rate. Imagine that I take a loan of 2 lakh rupees at an interest rate of 15%, and then they mention that it is flat. 2 lakh rupees at the rate of 15%, say for a span of 4 years. How do they calculate interest? 2 lakhs multiplied by 15% multiplied by 4 years. So that 2 lakhs multiplied by 15% multiplied by 4 years will be 1 lakh 20,000. They'll say your total repayment should be 2 lakhs plus 1 lakh 20,000. Total amount 3 lakh 20. But you are not going to repay the entire amount at once. You're going to repay this amount as such beta over a span of divided by 48 months will be your monthly installment. Your effective interest rate turns out to be way more than 15%. In fact, usually it is around 30-32%, double the interest rate. So, are you not repaying the amount right from month 1? Yes or no? Shouldn't the loan component outstanding keep reducing every month? If the loan component beta is reducing every month, shouldn't they charge interest as such guys on a lower amount? Correct? But they're not doing that. They're charging interest only on the original principal. ये जो भी autos रहते हैं बेटा who take loans from smaller NBFCs as such guys, they compute like this only. मतलब the other day, थोड़े दिन पहले I was computing the effective IRR. They make an IRR of about 32-33%. That is the effective return that they generate on loans that are given as such guys for funding autos. जो auto खरीदता है बेटा उसको नहीं मालूम है that is giving 32%. He only looks at the interest rate of 15%. He does not know what is flat rate, what is diminishing rate. All that he concentrates as such beta is that this is flat rate system. We are buying at only 15%. Who will give me loan at 15%? This is much cheaper. Bajaj Finance as such guys give certain personal loans at flat rate system. They charge a flat rate of 18% and there's a processing fees of 6%. And the loan is to be repaid over a span of 3 years. Effective interest rate turns out to be only 48%. That is the effective rate as such guys that they are charging because you are repaying the amount as such beta right from month 1. How to compute that effective rate? We will learn IRR concept. But as of now guys, understand what is flat rate. Flat rate mein beta interest is always charged on the original principal even if you are repaying the amount. We do not compare this with simple interest or compound interest, but you are charging interest on the original principal amount even if there is repayment made right from month 1. Under diminishing balance method as such beta interest is levied only on the reduced principal. जैसे housing loans that we take from banks as such guys are all examples of diminishing balance. The vehicle loans that we take beta from bigger banks, bigger NBFCs are examples of diminishing. Smaller NBFCs as such guys, vehicle loans also charge flat rate system. They charge 8% flat rate system. अपन को लगता है 8% is a much lower rate of interest, but then it effectively turns out to be 16-17% as such beta. Are we clear about the concept of flat rate and diminishing rate? So whenever we are taking a loan, we should be very careful about the computation of interest system. They will write there beta flat बोल के interest rate के आगे flat word use कर देंगे, but most of likely beta we do not even go through the loan document properly. The only thing that we concentrate on is where do we sign. Yes or no guys? वो कोई आएगा loan broker बेटा, he'll say sir यहाँ sign करना है बोल के, अपन ऊपर देखते भी नहीं what is the content. In majority of the cases the content is not even printed. It says आप sign कर दो sir, मैं देख लूँगा बाद में, I will get it printed. After that whatever they print better, that is the final terms. मतलब एक बार I was just arguing with this Bajaj Finance people only. Someone took a loan as such guys. They said how can you not tell the consumer that it is flat rate or diminishing rate? That person was telling me, sir, I do not know what is flat rate or diminishing rate. I was told to sell the loan. I sold it. Over. Anyways, beta, are we clear about this? So, on mein aa gaya what is simple interest and understood the example of debenture, because this will determine a very important factor beta that we are going to learn. There is something called as reinvestment risk in debentures. Reinvestment risk is once you put in your money as such beta and you are realizing your money every year, will you be able to invest that money at an appropriate rate or not? See, abhi jaise if I invest in this debenture guys and the company is giving me coupon every month, Will I be able to invest that money at an appropriate rate or not? Won't that affect my return? But agar वही cumulative hai, that is the last series 7 guys, do I have to worry about reinvestment? Company itself is compounding my money. I will continue to get that 13.03%. When you put your money in a fixed deposit, they will give you an option guys. Do you want interest to be paid out on a monthly or quarterly basis, or do you want interest to be accumulated? If you are accumulating it, you do not have to worry about reinvestment. But if you are opting for interest to be paid out on a monthly or quarterly basis, should you worry about reinvestments? Definitely yes. Are we clear about this? Likho beta ye. Write this part better first. क्या लिखे heading? Time value of money. Right. On account of inflation. On account of inflation. On account of inflation. The prices of commodities increase. The prices of commodities increase. Prices of commodities increase. And hence, the quantity of goods that can be purchased, and hence the quantity of goods that can be purchased, the quantity of goods that can be purchased with the given amount of money, the quantity of goods that can be purchased with the given amount of money, with the given amount of money will reduce. The quantity of goods that can be purchased with a given amount of money will reduce. To compensate for decrease in purchasing power, to compensate for decrease in purchasing power, decrease in purchasing power, there should be some return generated. There should be some return generated. There should be some return generated on the amounts invested. There should be some return generated on the amounts invested. On the amounts invested. Next beta. The return is usually in the form of interest. The return is usually in the form of interest. The return is usually in the form of interest. Next side reading beta. Simple interest and compound interest. Simple interest and compound interest. Simple interest and compound interest. Under simple interest, interest is always computed. Interest is always computed. Interest is always computed. Always computed on the original principal. On the original principal. On the original principle. Irrespective of the amounts being accumulated. Irrespective of the amounts being accumulated. Irrespective of the amounts being accumulated. Next, under compound interest. Under compound interest. Under compound interest. Interest for the subsequent periods. Interest for the subsequent periods. Interest for the subsequent periods. Interest for the subsequent periods will be on the accumulated balance. Will be on the accumulated balance. Accumulated balance. That is inclusive of interest. That is inclusive of interest. Inclusive of interest. Till the end of the previous period. Till the end of the previous period. उसके नीचे लिखो बेटा. Example. Amount deposited 1000 rupees. Interest rate 10%. Amount deposited 1000 rupees. Interest rate 10%. Period 3 years. Interest rate 10%. Period 3 years. Case 1. If interest is calculated under simple interest basis. If interest is calculated under simple interest basis. Simple interest basis. Every year interest will be. Every year interest will be. Every year interest will be 1000 into 10%, 100 rupees. कितना बोली तो? 2000. Every year interest will be 1000 into 10%, 100 rupees. And accumulated balance at the end of third year will be 1300. Accumulated balance at the end of third year will be 1300. 1300. Case 2. Under compound interest, the accumulated balance at the end of third year will be accumulated balance, but at the end of third year will be, right, like this, guys. 1000 plus interest for first year is 100. You will have 1100. Interest for second year will be 110. So that'll be 1210. And interest for third year beta would be 121. You will have a balance of 1331. Online students, if there's any issue with the streaming, you can directly message in the group or here as well. So interest beta will be 100 for the first year, 110 for the second year, and 121 for the third year. So your accumulated balance will become 1331. Now case 3. Case 3, guys. If the interest of 100 rupees is paid out every year, if the interest of 100 rupees is paid out every year, if interest of 100 rupees is paid out every year, the accumulated balance, at the end of first year, or second year will remain at 1000. The accumulated balance at the end of first year or second year will remain at 1000. Will remain at 1000. Kaise beta? So you're depositing how much? 1000. What should be the interest at the rate of 10%? For year 1 it should be 100. But what is the repayment, guys? 100. Your repayment was not there in the previous two cases as such, guys. So your accumulated balance as such beta at the end of year 1 will come back to 1000 rupees. That will not increase. So that is why when they're computing interest for the second year as such, guys, they will compute interest only on that 1000 rupees beta. It will still be 100. You can write like this beta for 2 years. Repayment will be 100 and your accumulated balance will come back to 1000. So does simple interest remain same even in case of repayment every year? You should not talk about simple interest beta is what I'm trying to tell you if there is repayment every year. By default it is considered to be compound interest. Just when you are investing in a debenture, though it is annual interest remains same, in effect you're compounding your money because you will be able to reinvest that money elsewhere. You should talk about simple interest only when the amount is not being paid out to you. Are we clear about this, guys? So this will be considered as what beta? This can be considered as a case of compound interest. This can be considered as a case of compound interest. This can be considered as a case of compound interest. As the 100 rupees received every year One second, beta Rajat. Kya likhe? This can be considered as a case of compound interest. As the 100 rupees received every year can be reinvested elsewhere. As the 100 rupees received every year can be reinvested elsewhere. 100 rupees received every year can be reinvested elsewhere. समझ में आ गया बेटा? Now he says even if principal is repaid as such beta, it will be compound interest. Classic example, housing loan. Don't you repay principal every month as such, guys? Housing loan, car loans as such, guys, जो भी है, your EMIs, equated monthly installments, guys, comprise of both interest portion and principal portion. Whatever is the amount of interest principal that you're paying as such beta, that will be reduced from the outstanding balance and interest is levied on the remaining balance only. But that is still considered to be a case of compound interest. It is not considered to be a case of simple interest. Banks do not charge interest on simple interest basis, but banks will obviously charge. Diminishing is by default compound interest. It is not simple interest. Clear, kids? Now beta next. So under compound interest beta, एक second सुन लो. Understood all the three cases, guys? For me, that reinvestment part is only important, guys, nothing else, because that will determine a lot of concepts later in debt valuation. You should know whether there is reinvestment opportunity or not. Under simple interest beta, to compute interest component, the formula is what, guys? Directly principal into time period into rate of interest. So that in our example beta, it was 1000 years, 1000 rupees beta into 3 years into 10%. The total amount beta was 300. Once you get that beta, your accumulated balance will become 1000 plus 300, that is 1300. Under compound interest, guys, what is the formula to compute your simple interest? कभी आएगा नहीं बेटा, बस पढ़ाने के लिए पढ़ा रहा हूँ. Compound interest is definitely important. So compound interest में बेटा, how are we going to compute accumulated balance? Principal amount into 1 plus rate of interest beta whole power n. Our principal amount was 1000 rupees, guys. Rate of interest was 10%. Time period was 3 years. Okay? It's like this, but 1000 into 1.1 will give us accumulated balance at the end of first year. Isn't that 1100? You multiply by 1.1 again, you get accumulated balance at the end of second year, which is 1210 rupees. You multiply by 1.1 again, you get accumulated balance at the end of third year, 1331. You will not be able to compute the interest component directly. You're always supposed to arrive at accumulated balance first under compound interest. You arrive at accumulated balance. From that you deduct whatever was the amount of your principal portion. The leftover amount as such beta will be interest. You deposited 1000 rupees, you got 1331. You have earned an interest of 331 rupees. This will be the amount of interest. Are we clear about this? जैसे बेटा वो दूसरा वाला एग्जाम्पल डिबेंचर वाला जो अभी बताया था, फेस वैल्यू ऑफ द डिबेंचर वाज 1000, यील्ड बेटा वाज 13.03%. कैन वी कंप्यूट एक्यूमुलेटेड बैलेंस फॉर 3 years? They were not paying out anything every year as such beta, they are paying out the entire amount at once at the end of third year. What will be the accumulated balance? 13.03 था ना? Yeah. 36 months, 13.03% बेटा. कैलकुलेटर्स है घर पे, रहने तो बेटा घर पे, कभी कभी उनको भी रिलैक्स करवाओ. हाँ, यू गॉट इट बेटा? नो, विल गेट टुमारो. थैंक यू. 1444 or 23.83? Then I have to look at the terms of issue as such beta, the amount will not be at face value. So anyways, so if you are depositing 1000 rupees as such guys at an yield of 13.03%, that is being compounded annually as such beta, the accumulated balance should become how much? 1000 into 1 plus 0.1303% beta. You will get 1344 rupees. This should become your accumulated balance as such guys, and the amount of interest that you will be generating as such beta will be 444 rupees. दोनों cases समझ में आए guys? Now, is there a compulsion that interest should be compounded only once a year? Compounding period. Rachit, I hope your doubt was clear, but अगर जब भी doubt पूछ रहे online students, reply yes after that so that I know that you've understood it. This applies to all. Now, there's no compulsion beta that compounding should be done only once a year. Compounding can be done more than once a year. In all our examples just sath beta, any loan amount, compounding is always done on a monthly basis. If you are repaying the amount beta on a monthly basis, that means compounding is being done on a monthly basis. If you are repaying the amount on an annual basis, it means compounding is being done on an annual basis. समझ में आ रहा है? So compounding beta can be done once a year. Compounding can be done more than once a year. Compounding can be done as such beta 12 times a year also. It all depends on how are they computing interest for the subsequent period. So if they compound as such beta say on a quarterly basis, it means interest will be computed for every 3 months added to the amount of principal, and then they're going to compute interest for the subsequent period. All right guys. So if you're depositing an amount of say 10,000 rupees at an interest rate of 12%, I'm changing the rate of interest so that it's easier to divide by 12. And let us say beta that the total term is 2 years. If 12% is such beta is for the entire year, they are going to offer you how much beta per quarter? Per quarter they are going to offer you 3%. 12% divided by 4 quarters. There are 4 quarters in a year. 12% is for the entire year, or you can write 12% beta into 3 months divided by 12 months. They're going to add interest at the rate of 3% as such guys every quarter, and then they're going to compute interest for the next quarter. जैसे you depositing 10,000 rupees beta, interest for quarter 1 कितना हो जाएगा? 300. What will be your accumulated balance? 10,000. How will they compute interest for the second quarter? On 10,300. That will be how much beta? 309 rupees. The story continues. If the same thing is being done on a semi-annual basis or a half-yearly basis, guys, what will be the interest that they're going to offer? For 6 months as such, guys, or per semi-annual period, the interest rate to be offered will be 6%. 12% is for the entire year. 12% into 6 months divided by 12 months. That is 6%. They're going to compute interest for every 6 months. That is 600 rupees for the first half-year period. and then they will compute interest beta for the subsequent period. What will be the amount, guys? 636. Story continues. If interest is being compounded beta annually, they will directly add interest at the rate of 12%, compute interest for the first year, and then compute interest for the subsequent period. Yes or no? Now, how will I compute my total accumulated balance beta here? I'm depositing how much? Every time they're giving me interest, it is at the rate of 3%. In 2 years, how many times are they going to compound like this? Every 3 months, they are going to compound my money as such beta. In a span of 2 years, the total compoundings that are going to take place as such, guys, will be 8. Yes or no? So that will become 10,000 beta multiplied by 1.03 whole power 8. Give me a minute, guys. Yes, beta. So, are we all clear about this, guys? So, example 1 में क्या बोल रहा था beta? It was 10,000 rupees at the rate of 3%. Why did I write whole power 8? Compounding is being done as every quarter beta in a span of 2 years. There are going to be 8 quarters. Correct? Sairam, second वाले example में क्या लिखेगा beta? It is being done on a semi-annual basis. That is every 6 months. The total time period is how much? Huh? 5 years. Huh? 2 years, correct. So in 2 years, there will be how many semi-annual periods? 4. So what are we going to write beta here? 10,000 multiplied by 1.06. Are we not computing interest at the rate of 6% beta every time we're doing it? Whole power, how many periods? Because in a span of 2 years as such, guys, you will have 4 semi-annual periods. You can write this as what beta? The formula that you've learned in foundation. Principal amount into 1 plus r percentage by m whole power n into m. Formula याद नहीं भी रखेगा तो चलेगा बेटा. You just have to know the basic concept there. M stands for the number of conversion periods in a year. Alright, guys. If it is done on a quarterly basis, there will be how many conversion periods in a year? The number of compoundings that are done in a year as such beta will be 4. If it is done on a semi-annual basis, there will be how many compounding periods in a year? 2. If it is done on a monthly basis, 12. If it is done on a daily basis, we do not take 365 beta. We will learn later. We will replace it with something called as e power RT. We will have that concept also as such, guys. As of now, yes, if it is daily compounding, it is divided by 365. Divided by 365 whole power करना आएगा नहीं बेटा. We use the concept of limits. No one is expecting you to have background of max knowledge as such, guys. But then based on that beta, we derive the concept of E and directly use e power RT rather than using all of this. We will discuss this later beta, not required as of now. ये समझ में आया? Yes or no, guys? Now, so if the principal amount is 10,000 as such, guys, rate of interest is 12% per annum, and say the total time period is 3 years. If you were to compound it, guys, on a monthly basis, how are we going to write this? 10,000 multiplied by 1 plus 12% is for the year. We are going to divide this by how many? 12 conversion periods in a year. Whole power beta 3 into 12. Without using the formula also beta, you can directly write that it is 10,000 into 1.01 whole power 36. Every time interest is computed, that will be at a rate of 1%. In 3 years, there will be how many monthly periods? 36. So it should be 10,000 into 1.01 whole power 36. Yes or no, guys? If it is done on a quarterly basis, what are we going to write better? M will be 4. This will become 10,000 into 1 plus 0.12 divided by 4 whole power 3 into 4. So this will be 10,000 into 1.03 whole power 12. If it is done on a half yearly basis as such, guys, what are we going to write? I know you know all of this better. चुपचाप आंसर बोलो ना, कान के नीचे खाओगे वरना. 12% divided by 2, guys, that is 6% for every 6 months. Whole power what better? In a span of 3 years, guys, you will have 6 half yearly periods. So you're compounding interest at the rate of 6%. That will be 6 times in 3 years. Are we clear about this? Based on this, we have a very important concept called as effective rate of interest, which we will be using in multiple chapters. ठीक है, अभी के लिए इतना लिखो बेटा. What did we write so far? वो हो गया ना एग्जाम्पल ऊपर. ये लिखे सिंपल इंटरेस्ट नहीं ना. राइट दिस बेटा. Write this, guys, simple interest and compound interest का formula. Right, only that 331 rupees better. लिख लिया बेटा 331 तक. Did you write till that interest portion better? 331. Are we all done? Next better write down. If compounding is done more than once in a year, if compounding is done more than once in a year, if compounding is done more than once in a year, more than once in a year, the effective realization will be more than the interest rate stated. The effective realization will be more than the interest rate stated. Effective realization will be more than the interest rates stated. उसके नीचे लिखो बेटा. If principal is 10,000, rate of interest is 12% per annum. Rate of interest is 12% per annum. Time period beta is say 1 year. Time period is 1 year. Right, like this beta. If it is compounded annually, if it is compounded semi-annually, if it is compounded quarterly, these are your compounding periods. What will be the interest rate applicable beta? If it is annually, you're directly going to write 12%. If it is semi-annually, you will write 12% into 6 by 12. That will be 6%. If it is quarterly, you're going to write 12% into 3 months divided by 12 months, and that is going to be 3%. The amount of deposit that we are making today, beta, is 10,000 rupees. यहाँ पे they will directly add interest for year 1, beta, for the entire year, and that will be 1200. You will be left with an accumulated balance of 11,200. यहाँ पे what are we going to do, beta? Interest will be computed for first 6 months. For the first 6 months, they will compute interest at what rate? 6%. So that will be 600. After that, beta, interest will be added for the next 6 months. Interest for next 6 months. How much will that be, beta? 10,600 into 6%. 636. So the total amount, beta, will become 11,236. In the last case, beta, keep adding interest 4 times. Interest for quarter 1, beta, it is 300. What will be the amount of interest for quarter 2, guys? पूरे 4 क्वार्टर का बोलो बेटा मेरे को. टेन 30 के पहले ट्रांसैक्शन भी नहीं करते ये लोग. Yes, guys. What is the interest for second quarter, guys? 309. What is the interest for the third quarter, beta? 318. Next, beta, this will become 10,927. Last quarter, 328. The total accumulated balance, beta, that you will have will be 11,255. The total accumulated balance that we have, beta, is 11,255. Are we clear? So how do you directly compute accumulated balance, beta, if compounding is done more than once in a year? Did you all write these figures? So accumulated balance का formula क्या रहेगा बेटा? P into 1 plus R percentage by M whole power N into M. P into 1 plus R by M whole power N into M, where M stands for the number of compounding periods in a year. N is nothing but, beta, the number of years. M stands for the number of compounding periods in a year. N is the number of years. Are we clear about this? Yes or no, kids? ये लिखो बेटा उसके बाद में. This part. Principal 10,000, rate of interest 12%, time period 3 years. Are we all done with this? You do not have to write those values, but लिख लिया यहाँ तक. Now, talking about effective rate of interest, guys. Are we all clear how to compute accumulated balance? Effective rate of interest. Imagine better that you're issuing a debenture and you would want to offer an yield of 12% to your debenture holders. How did they arrive at that yield of 12%? Based on, say, prevailing interest rates. You're issuing a debenture with a maturity period of, say, 5 years. You would want to offer an effective yield of 12% to your debenture holders. At the time of issue of debentures, guys, there are multiple options given to the debenture holders. Do you want interest on a monthly basis? Do you want interest on an annual basis? Or do you want the interest to get accumulated? All right. Obviously, in all the cases, beta, they cannot offer the same interest rate. If I give you an option, beta, that the interest rate is 12% per annum, and if I ask you, do you want monthly, do you want yearly, or do you want it to get accumulated? What will you prefer? नहीं मालूम सर हमारे को. Interest rate is 12%. I say beta that irrespective of the option that you are choosing as such, guys, the amount is not going to change. Whether you do it monthly, whether you do it yearly, you will still get the same amount. What option will you choose? Monthly. Why monthly, guys? Poonam, why monthly? It compounds. If you're receiving money every month as such, beta, you will be able to reinvest that elsewhere and generate a higher return. Can the companies do that as such, beta? They will not offer the same coupon rate as such, guys. They will change the coupon rate. How are they going to change the coupon rate as such, beta? Is using the concept of effective rate of interest. Pehle to, guys, in the example that we wrote, beta, 1 year wala, I'll tell you how to compute that, guys. 1 year. In the first case as such, guys, that is annual basis. What was the accumulated balance? Continuing with the same example, beta, in the case of annual, you had 11,200. This is accumulated balance, beta, in 1 year. If you were compounding it, guys, on a semi-annual basis, what was the accumulated balance that you had? 11,200. And if you were doing it on a quarterly basis, what was the accumulated balance that you had? 11,255. So what is the interest income, guys, for 1 year? In the first case, beta, you are making an interest income of 1,200. Next, beta, 1,236. Next, 1,255. All of this is on a principal of 10,000 rupees. In all the three cases, beta, the amount of deposit was constant. The amount of deposit is not changing. So based on this, guys, what do you think will be your interest rate? First case, beta, you're going to write 1,200 divided by what? 10,000. Won't that become 12%? Next case, beta, it will be 1,236 divided by 10,000. That will become 12.36%. Next case, 1,255 divided by 10,000. 12.55%. Paying out 12% per annum on a monthly basis is as good as you effectively realizing 12.55% in a year. If I give you 1% every month as such, beta, you are not making 12% in a year. If you are able to reinvest that money, you will effectively get 12.55% quarterly agar kar rahe ho to, beta. If you are doing it on a half yearly basis, you're effectively making 12.36%. Though the stated interest rate, beta, is 12%, your effective yield is more. You are effectively making 12.36%. Yes? ये समझ में आया बेटा क्या लिखा? What do you think will be the formula for this, guys? What is the formula for effective rate of interest? Look at those faces. Yes, beta. We just divided interest income by what, guys? Principal portion. How did we compute our interest income? We took the difference between accumulated balance and principal. Then you divide that by your principal portion. How do you compute accumulated balance when compounding is done more than once in a year? P into 1 plus R percentage by M whole power N into M. Won't N be 1 year? We are doing it for 1 year, guys. Won't N be 1 year? minus principal divided by the amount of principal. If you take that P common and strike it out as such, beta, what will you be left with? 1 plus R percentage by M whole power M minus 1 divided by P. This P will get striked out. This is the answer. So whenever you have to compute effective rate of interest, you directly write what, beta? 1 plus R percentage by M whole power M minus 1. This is to compute effective yield. अभी अपने example में बेटा was R 12%. If M is 2, that is compounding is done on a half yearly basis. What are we going to write here? 1 plus 12% by 2 whole power 2 minus 1. Calculators है? Calculate करके amount बोलो बेटा. 12 point, you'll get 0.1236, that is nothing but 12.36%. If M is equal to 4 beta, 1 plus 0.12 divided by 4 whole power 4 minus 1, you should get 0.1255, that will be 12.55%. Your effective yield beta will be 12.55%, 12.36%. If compounding is done twice a year, if compounding is done 4 times a year. Are we clear about this? Yes or no, guys? Now beta, Khyati tu bol. You're issuing a debenture. You want to offer an effective yield of so you want to offer beta an effective yield of 8.84%. All right, but you want to pay out monthly. You do not want to pay out on a yearly basis. You want to pay out on a yearly basis, directly offer them a coupon of 8.84%. Kahani khatam. If you want to pay them on a yearly basis. You do not want to pay them on a yearly basis, you want to pay them on a monthly basis. But you still want to offer an effective yield of only 8.84%. What should be the interest rate that you should be telling your investors? Reverse calculation. समझ में आ रहा है क्या बोल रहा हूँ guys? Using effective yield, you're supposed to arrive at the interest rate that is to be offered. You're supposed to solve this, guys. What's your name, hero? Gokul. Niharika answer వచ్చిందే. You'll borrow calculator. See, they're anyways not interested in solving. They're like, take it first. $8.5 ना चूसना अక్కడ हाँ ऑनलाइन लाइव वाले पीछे जा रहे होंगे रिवाइंड करके we'll look at the screen and directly tell the answer बोल के आया 8.5 कितना आया नहीं मैं तू भी कैलकुलेटर लेके नहीं आया और 12th रूट कैसे निकालना है गाइस वही सोच रहे हो भूल गए वो guys to compute any root as such guys you have to press square root 12 times minus 1 divided by whatever root that you want. If you want 12th root you will write divided by 12. If you want 5th root divided by square root 12 times better, then plus 1 and then into equal to combination 12 times. एक तो नींद आ रही है ऊपर से मेहनत करा रहा है सुबह सुबह You'll have to press square root 12 times minus 1 divided by 12 because you want 12th root. If you wanted 7th root, you'll divide by 7. Baki pure steps are same. Divided by 12 plus 1 into equal to combination 12 times. कौन आ गया आंसर दर्शन आ गया 8.4 8.4% 8.5%. 0.1% काम आ रहा, कमीशन है क्या तेरी? Online students, if you're also done with the calculation beta, you can type and send. It's easy to type. Krisha done? यहाँ पे कृषा है बेटा, वहाँ पे कृषा है. गति विधि डन. Did you get 8.5? अगर तू सिर्फ 8.5 कैलकुलेटर पे मार के बताई ना, मार खाएगी बोल. Did you get the answer or no? No sir. बोलना यार, उसमें क्या शर्म है, सेकेंड ही तो है ना, थोड़ी मारूंगा आज. Yes guys. Guys, we all know beta that your effective rate is equal to what? 1 plus r percentage by m whole power m minus 1. बेटा अपन को इंटरेस्ट रेट नहीं मालूम है. वी डू नो दैट द इफेक्टिव यील्ड इज 8.84%, माने 0.08884. 8.84% is nothing but 0.0884. This is equal to, is this company paying out monthly or is it paying it on a yearly basis? 1 plus r by 12 whole power 12 minus 1. Any doubt in this? I'm not telling you what is the monthly rate as such, but I'm telling you what is the effective yield using which we're supposed to arrive at our monthly rate. You get that minus 1 to the other side as such, but it will become plus 1. So 1.0884 is equal to 1 plus r by 12 whole power 12. So 12th root of 1.0884 is equal to 1 plus r by 12. How will you compute 12th root of 1.0884? By doing this. You press square root 12 times, then you write minus 1 divided by 12 plus 1, and that into equal to combination beta 12 times. प्रणव हो गया. Once you do that beta, tell me what is the value that you're getting. 1.00708. आगे एक बोलो ना यार, वो छोटा. 84884. This is equal to 1 plus r by 12. Did you get this? 1.0070884 guys. You bring that 1 here beta, minus 1 हो जाएगा, so that will become 0.07084. This is equal to r by 12. Now r equals 12 times of this. You will get 0.088, 0.8. So that'll be 8.5% guys. This is the value beta that you will get. This is how companies reverse calculate guys. They know that they will have to provide an effective yield of 8.84%. So the coupon rate that is to be offered as such beta is 8.5%. Only if they offer a coupon rate of 8.5% as such beta, they will be able to effectively give the investors a return of 8.84. समझ में आ रहा है नहीं आ रहा है बेटा? The ones who are directly opting for cumulative option as such beta 12 months. This was only for 450 days wala. So that is why you do not see cumulative option. They will directly offer an yield of 8.84%. See guys, this is what. If you are realizing cash flows on a monthly basis, will you be able to reinvest elsewhere on a monthly basis? तुम्हारे लिए it has become monthly compounding. For company also as such guys, please do not forget there is an outflow. Isn't that increasing their other opportunity cost at the end of first month only? Instead of paying you the amount at the end of the entire year, they're giving you on a monthly basis. Won't the opportunity cost of company beta arise on a monthly basis only there? So if the timing of cash flow is monthly, it is monthly compounding. Though the money may not actually compound with you. What if you're just keeping the money with you beta and not doing anything with it? That is your headache. Not the headache of the company. Company has given you the amount as such beta, you are supposed to reinvest it, you're supposed to do whatever you want with it, that is your wish. But it is to be considered as monthly compounding. If the company is paying you on a yearly basis as such, guys, it is to be considered as yearly compounding. This is what it is at. If the company is paying you on a quarterly basis, it is considered to be quarterly compounding. समझ में आ रहा है नहीं आ रहा है? Concept of effective rate is important, guys. They may not ask us to reverse calculate. They will give us monthly rate. They will give us quarterly rate. Ask us to compute what is the effective yield that we are generating in a year. Across multiple chapters, you will see this terminology of effective yield. Are we very clear about this, guys? Yes or no? चलो बेटा लिखो. कहाँ पे थे अपन? ये लिखना है ना? Write this बेटा now. Effective rate of interest. Start noting down the example. Online students, I hope it is clear. Guys, यहाँ 12.36 and 12.55 तक लिखो वो पूरा the formula in that. Copy till 12.36, 12.55%, guys. उसके बाद में debenture का I'll explain. I'll give notes. All right. Now write down better. When debentures are issued, when debentures are issued, after you're done writing that example, better write down. When debentures are issued, multiple payout options, multiple payout options, multiple payout options, multiple payout options are given to the investors, are given to the investors. Multiple payout options are given to the investors. Irrespective of the option selected, 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 the effective yield for a given maturity cannot change. The effective yield for a given maturity cannot change. Effective yield for a given maturity cannot change. Cannot change. The coupon rate is altered. The coupon rate is altered. The coupon rate is altered to maintain the same effective yield. The coupon rate is altered to maintain the same effective yield. Same effective yield. I don't example. 3 years maturity. Example beta 3 years maturity debenture. Effective yield is at 10%. Effective yield is 10%. Now, if there is annual payout beta, what will they do, guys? They'll directly offer an interest rate of how much? 10%. There is no need to change any computation here. If the payout is on an annual basis, they will directly offer beta interest rate of 10%. What if it is half yearly beta payout, semi-annual payout? If it is semi-annual payout, क्या करेंगे बेटा वो लोग? 1 plus r by m whole power m minus 1 should be effectively equal to how much? 10%. You do not know the interest rate. You do know that the number of compounding in a year's beta are how much? 2. So 1 plus r by 2 minus 1 is equal to 0.1. Ankit, you don't have to do square root 12 times. You can do only once now. 1 plus r by 2 whole power 2 beta is equal to 1.1. Take the square root of 1.1 beta. कितना आ रहा है? 1.0488. Now guys, the value of r beta finally, r by 2 will be 0.0488 and the value of r beta is 9.76%. So they will offer a coupon rate of 9.76% so that the investor effectively realizes an amount of 10% per annum. Whoever is investing in this debenture undoubtedly has reinvestment risk. If he does not invest that amount as beta at the same rate, he is not going to effectively realize this amount. 1 plus r by 2 beta is equal to square root of 1.1. You will get the value of r as 9.76%. Now the same thing beta if it is on a monthly basis. If there is a monthly payout, guys, did you write this beta 9.76%? Now if it is on a monthly basis, guys, what will be the effective return? Right, 1 plus r by m whole power m minus 1 is still equal to how much beta? 0.1, 10%. 1 plus r by 12 whole power 12 minus 1 is equal to 0.1. You will get supposed to take the 12th root of this, guys. Square root 12 times minus 1 divided by 12 plus 1 into equal to combination beta 12 times. 9.56, 1.57 approximately. 1.569% beta will be the coupon rate to be offered, so that you maintain a monthly payout of, so that you maintain an effective yield of 10%. Payout guys will be 9.569%. क्या हुआ निमित? Are we clear about this guys? Yes or no? We'll see this later beta again in bond valuation. Computation of effective yield. अभी के लिए ये clear है? Any doubt in this guys? This is just reverse calculation, arriving at interest rate beta using the concept of effective yield. Now guys, moving on to the next. So we did simple interest, compound interest, how to compute accumulated balance if compounding is done on an annual basis, if compounding is done more than once in a year, and then what is the concept of effective rate of interest. The next one beta is present values. We will be learning the concept of present value of annuity, present value of perpetuity, constant growth perpetuity, because we do all of that beta in a hell lot of chapters. Everywhere beta we'll have to use those formulas, so we do not have an option. We still have to do all of this. So what do you understand by the word present value, Dhruv? Value of the entire balance as on the, yes beta, the value of any future receivable or payable as on the current date as such beta will be the present value. We all know that the value of money keeps changing, so in the present value terms, what it is worth as such guys is what you'll have to do. Just say someone told me 20 years later as such beta, matlab we made those calculations. Someone told me matlab 20 years later as such guys, if I build a corpus of 20 crore rupees as such guys, that will be as good as about 5 crore rupees today. Nothing else. The quantity of goods that I'll be able to buy as such guys with a corpus of 20 crore rupees after 20 years will be exactly the same beta as 5 crores today. Nothing more than that, or in fact lesser than that as well as such guys. Or the way prices have been increasing in the last 2-3 years as such guys, if they continue to grow at that rate as such beta, then it might not even be 2 crores as such guys in present value terms. The quantity of goods that you will be able to buy 20 years later with 20 crore rupees as such guys might just be equal to the quantity of goods that you're able to buy with 2 crores today. So present value guys is nothing but the value that you're going to derive in present value terms. How do you compute present value guys? We all know accumulated balance guys is 1 P into 1 plus R whole power n. If it is compounded annually, by default beta every question it will always be compounded annually. If nothing is given, it is always compound interest, it is always compounded on a annual basis. The P here beta becomes present value. We write present value beta is equal to your future value divided by 1 plus R whole power n. In other words, present value is what is the amount of deposit that you're supposed to make today to receive a certain sum of money on a later date. I want to receive 1 lakh rupees after 5 years. To receive that 1 lakh rupees after 5 years, what is the amount of money that I should be depositing today will become its present value. Someone is giving you a piece of paper, tells you that you will be receiving an amount of 10,000 rupees against that after 2 years. What is the value that you are willing to pay for that 10,000 rupees today will become its present value. Is that clear guys? So present value is nothing but the amount of money that you are willing to deposit. Any doubt in this guys? For this we learn the concept of present value interest factor, or simply called as present value factor. I prefer writing PVF. ICAI writes PVIF. And then there is something called as present value interest annuity factor guys, or just simply PVAF, present value annuity factor. ये समझ में आया बेटा, PV is equal to simple formula of compound interest. Now what do you understand by present value factor guys? Discounting rate is discounting rate only, required rate of return. It is not present value factor. क्या कर रही है? It is a factor. If you multiply future value with present value factor, it will become present value. So that is why is it called as that present? See, when you say something is present value factor as such beta, you're supposed to multiply that to future value. That is why it will get converted into present value. The value of rupee 1. So when you say present value factor as such, guys, there is nothing but the present value of 1 rupee receivable on a later date. If you were to receive 1 rupee, say guys, after 4 years, what is the present value of that 1 rupee today will become your present value factor. Correct beta Poonam? First class है तेरी आज. तेरी first class है आज. कल आई थी तू क्लास में थी? नहीं थी ना, first है आज. नींद आ रही है थोड़ी? अच्छा नहीं चलता सर, आप कंटिन्यू करो. So if you were to receive 1 rupee beta after 4 years, the present value of that 1 rupee today will become your present value factor. जैसे if, तो basically बेटा अपने हर एक केस में accumulated balance should be 1 rupee. We all know the formula beta again. How do you write present value, guys? Don't you write accumulated balance divided by 1 plus r whole power n? I told you like 160 seconds earlier, guys. You'll write present value as accumulated balance divided by 1 plus r whole power n. If you were to receive 1 rupee, guys, after 4 years at an interest rate of 12%, what should be the present value of that? You'll write 1 rupee divided by 1 plus 0.12 whole power 4. You can directly write beta 1.12 divided by twice, press equal to 4 times. The new calculators you will have to press divided by twice. So 1.12 divided by twice, press equal to 4 times because you want 1 divided by 1.12 whole power 4. कितना आ रहा है बेटा कैलकुलेटर पे? याशा कैलकुलेटर है? ओहो. Next time, every time I tell something, but I'll 0.6. Continue कर दो. 0.6355 beta will be the present value factor. So basically, if you deposit 0.6355 rupees today, you are going to receive an amount of 1 rupee. After how many years? 4 years. Provided the rate of interest is 12%. This can be written as present value factor at 12% for the first year. Sorry, fourth year. देख रहा था बेटा, सुन रहे नहीं सुन रहे बोल के. So when I write present value factor at 12% for the fourth year as such, guys, this is nothing but 1 divided by 1.12 whole power 4. The value of which beta we have already written is how much? 0.6355. समझ में आ रहा है क्या बोल रहा हूँ guys? Likewise beta, if I want present value factor say at 13% for the third year, what does that mean? I will be depositing certain sum of money today. I will receive 1 rupee at the end of third year and the interest rate is 13%. Can I directly write this as 1 divided by 1.13 whole power 3? So how much will that be, guys? Point? If I deposit 0.6930 today, 31 beta ये ले, ये round figure वाला, ठीक है? 0.6931 as such, guys. Today at an interest rate of 13%, I will be receiving an amount of 1 rupee after 3 years. ठीक है? One final calculation. If I write present value factor as such, beta say at 15.5%, guys, for 2 years. What will you write again? 1 divided by 1.155 whole power 2. 0.7496. कैसे करोगे बेटा? I'll write 1.155, press divided by twice, press equal to 2 times because you want present value factor for the second year. So if you deposit 0.7496 today at an interest rate of 15.5%, you will be realizing an amount of 1 rupee at the end of second year. ठीक है guys? Now, so we know that present value factor at 13% beta for the third year is 0.6931. This means to deposit, sorry, if you deposit 0.6931 today, you're going to accumulate an amount of how much? 1 rupee in a span of 3 years. If you were to accumulate a sum of 50,000 rupees, how much should you deposit today? You will write 50,000 multiplied by 0.6931. You write cash flow multiplied by present value factor because present value factor is for 1 rupee. You are proportionately calculating it better for whatever amount that you want. You want it for 50,000, you will write 50,000 into 0.6931. You want it for 1 lakh, you will write 1 lakh multiplied by 0.6931. You want it for $1 billion, you multiply that $1 billion with 0.6931. It's all on a proportionate basis. Are we clear about this? Yes or no, guys? Understood the meaning of the word present value factor? We have used all of this beta in CA intermediate as well, CA foundation as well beta, but फिर भी समझ में आ रहा है? Now present value annuity factor. What do you understand by the word annuity, guys? Correct beta Rachit. हाँ. What do you understand by the word annuity? हो गया सर फाउंडेशन पास, सर्टिफिकेट चाहिए तो लाके रख देंगे यहाँ पे, क्वेश्चंस मत पूछो. Annuity, guys, is a series of cash flows where the cash flow remains constant and the time gap also remains constant. You should receive the same amount of money and the time gap is beta between those sums of money also should remain constant. So if you were to receive 1 rupee every year, beta, say for the next 4 years. If you were to receive 1 rupee every year for the next 4 years and the rate of interest is set 12%, what will be the present value, guys, of the first 1 rupee that you're going to receive at the end of first year? Can I write that as 1 divided by 1.12? I'm receiving 1 rupee at the end of first year, beta. The present value of that will become 1 divided by 1.12. कितना हो जाएगा बच्चों? 0.892. If you press equal to again, beta, you will get present value for the second year. How much will that be? 797. Yes, guys. विनय तो अकेला आंसर कर बेटा. हाँ उसको बैकर्स वाले ना. हाँ. Next, beta, equal to again. 7118. Press equal to again. 6355. So you got first year factor, second year factor, third year factor and fourth year factor, guys. If you add up all of these values, this is where you press GT in case you have GT on your calculator, beta. You will get the sum total of all of this. 3.037. क्या वाला आंसर आया? थोड़ा बहुत ऊपर नीचे हो गया ना. चलता. 3.0373, guys, is your annuity factor. So basically, if you deposit 3.0373 today, you will be able to withdraw 1 rupee at the end of every year for the next. After that, the balance will reduce to 0. You will not have anything left in your account. That is why you will not be able to withdraw anything. You want to withdraw even for more number of years, deposit more. Nothing else. If you deposit 3.0373 today, beta, you will be able to withdraw 1 rupee for the next 4 years. Are we clear? How does the calculation work, guys? Today we are depositing how much? 3.0373. What is the interest that the banker is going to offer you on this? कितना था बेटा यहाँ पे? 12%. How much is 12% beta of 3.0373? 3642. How much are you withdrawing at the end of first year, beta? You are withdrawing 1 rupee. What will be the balance that will be left in your account? 2.04. एक जना भोको बेटा. Yes बेटा खुशबू. 2.4018. For the second year, you're going to continue the same thing, बेटा. मेरे को बोलने की जरूरत नहीं है. Plus 12% minus 1 और balance बोल directly. 6900 उतना ही है. 1.69 plus 12% बेटा minus 1 again. 0.8928, guys, and then finally beta 0.8928 plus 12% minus 1, that will be equal to 0. If you're not getting 0 as such, beta, that's little approximation error because of that rounding off errors. So the balance will reduce to 0 at the end of fourth year. So if you deposit this amount today, you are going to generate some interest income. You're also withdrawing money beta from your account every year, and based on that the balance will come down to 0. जो FR पढ़ चुका है बेटा, amortized cost category, financial instruments, this is how you make computations. You also have the concept of effective interest rate there, EIR. One and the same, guys, कुछ फर्क नहीं है. Whatever we learn in bond valuation is exactly what you do under amortized cost category. The ones who are done with that as such, guys. Are we clear about this? जिनका नहीं हुआ है छोड़ दो बेटा. हाँ विधि ठीक है, तेरा हो गया. हाँ. All right, guys. Any doubt in this part? Understood? Write down, guys, present value. Present value. It is the amount of deposit to be made today. Yes, beta. Annuity is a series of cash flows. थोड़ा late देखा मैं. हाँ. It is the amount of deposit. It is the amount of deposit to be made today amount of deposit to be made today, to receive a certain sum of money, to receive amount of deposit to be made today, to receive a certain sum of money, receive a certain sum of money on a later date. Receive a certain sum of money on a later date. On a later date. उसके नीचे ऐसे लिखो बेटा, accumulated balance equals P into 1 plus R percentage whole power n. We can write this as future value is equal to, only because you guys should take time value of money seriously, they increase the weightage of time value of money in foundation. It comes to 12 marks, 14 marks only because of this. ताकि थोड़ा seriously, anything that is important will end up starting, no? PV is equal to beta future value divided by 1 plus R whole power n. Present value is equal to future value divided by 1 plus R whole power n. Example. A zero coupon bond has a maturity of 5 years. Example बोल के लिखो बेटा, a zero coupon bond. Zero coupon bond मतलब बेटा there will be nothing given to you in the form of interest. You are still making return because you are buying the bond at a lesser price and you're going to get back a higher amount on a later date. A zero coupon bond, क्या लिखे इसके आगे, has a maturity of 5 years. Maturity of 5 years. The redemption value is 50,000. Redemption value is 50,000. Redemption value is 50,000. Required rate of return. Required rate of return. Required rate of return is 13%. Is 13%. What should be the value of bond today? Required rate of return is 13%. What should be the value of bond today? So if you buy this bond, beta, how much cash flow are you going to realize? 50,000 rupees, beta, at the end of 5th year. When they ask us to compute value of it today, what is your required rate of return? 13%. So you would want to generate a return of 13%. You are going to pay the present value of this 50,000 rupees as such, guys, today. That is the maximum that you will be willing to offer for the bond. You're simply supposed to arrive at present value, guys. So that is 50,000 rupees divided by 1 point, कितना 13% बोला ना? So 1.13 whole power 5. 50,000 divided by 1.13 whole power 5 beta will be the present value. कितना आ रहा है ये? 26,000. 27,100 and so you will be willing to pay an amount of 27,138 rupees for this bond today, beta, and you will be making a return of 13% on that and effectively realize an amount of 50,000. Correct, Sairam? Yes or no, beta? Yes. Now write down, guys. Present value factor. सोया नहीं बेटा रात भर, काम ज़्यादा था ऑफिस में. तू भी नहीं सोया भाई, तुम दोनों का अलग ही चल रहा है. तू कब सोता है उसको कैसे पता है यार? एक ही घर में रहते हो क्या? चलता है बेटा. Present value factor, guys, write down. It is the present value of 1 rupee. Present value factor बोल के सारे हेडिंग लिखना, guys. Brackets में you can write this. It is either PVF or you can also call this as a what? PVIF. Present value interest factor. It is the present value of 1 rupee. Present value of 1 rupee. Correct, kids. Present value of 1 rupee. Receivable on a later date. Present value of 1 rupee. Receivable on a later date. receivable on a later date. That is accumulated balance is 1 rupee. That is accumulated balance is 1 rupee. Accumulated balance is 1 rupee. उसके नीचे ऐसे लिखो बेटा. Present value is accumulated balance by 1 plus r whole power n. So PVF will be 1 rupee divided by 1 plus r whole power n. So if interest rate is 10%, but a period is 3 years, we're going to write present value factor at 10% for the third year as 1 divided by 1.1 whole power 3. 0.77513. Present value factor at 10% for the third year beta will be 0.7513. So if we deposit 0.7513 today, how much will you receive? At 10% beta for 3 years, we will receive 1 rupee. If we deposit 0.7513 today beta at 10% for 3 years, we are going to receive 1 rupee. If the interest rate is 12% beta for 4 years, what are you going to write this as? Present value factor at 12% for the 4th year. This will become 1 divided by 1.12 whole power 4. How much is that beta? 0.6355. The value that we are going to realize beta is 0.6355. Are we clear about this? Present value annuity factor reading. Present value annuity factor. It is a present value of 1 rupee. यहाँ पे आके एक बार देखती सबको आशा. It is a present value of 1 rupee. Present value of 1 rupee. Receivable every year. Present value of 1 rupee. Receivable every year. For a defined period of time. For a defined period of time. For a defined period of time. Example. Interest rate is 12%. Time period is 4 years. 1 rupee is receivable every year. 1 rupee is receivable every year. Interest rate 12%, time period 4 years, 1 rupee is receivable every year. So, ऐसे लिखो बेटा. Your cash flow is 1 rupee, guys. You're going to receive only 1 rupee every year. The present value of the first 1 rupee will be 1 divided by 1.12. Second 1 rupee will be 1 divided by 1.12 whole square, whole cube, whole power 4. Khushbu value is बोल बेटा. 1 divided by 1.12 is 0.8928629. Next, 7972 7118 6355. So this is present value factor at 12% for the first year. This is present value factor at 12% for the second year, present value factor at 12% for the third year, and present value factor at 12% for the fourth year. You add all of them better, you are going to get your present value annuity factor at 12% for 4 years. How much is that better? 0.0373. 3.0373 will become your present value annuity factor beta for a span of 4 years. The ones who do not have GT option beta, you can use M plus. Every time you press equal to, also press M plus. In the end, MRC. Before you start your operations, press MRC twice, clear the entire memory. Are we clear about this? So what does this mean beta? If you deposit how much? If we deposit 3.0373 at an interest rate of 12%, we will receive 1 rupee every year for the next 4 years. We are going to receive 1 rupee every year for the next 4 years. If we deposit 3.0373 at the rate of 12% beta, we are going to receive 1 rupee every year for the next 4 years. Any doubt in this part? समझ में आ गया guys? इसका वो proof लिखो बेटा calculation का. You'll have to show calculations for how many years? 4 years. Start with. Did you write that sentence? Start with what beta? What was the balance? 3.0373. Banker is going to give us interest at the rate of 12%. We are withdrawing how much? 1 rupee. The withdrawal beta is 1 rupee every year. Keep writing what is the balance that you will have in the account at the end. Finish this calculation beta. Yes, guys. Are we done with this? What is the balance that you have it at the end of first year? There is a withdrawal of 1 rupee every year. First year के end में it was 2.40117. 8 beta average. Next 689. अरे यार लास्ट में 0 बेटा. हाँ ये 0.89 कितना था 2. You will have a balance of 0 rupees beta in the end. Are we clear about this? Yes or no, guys? So this was about present value factor and present value annuity factor. Most likely beta they give these factors in the exam in the question because they do not want students to get different answers. If they give an option as such beta koi 5 decimal points lega, koi hushari karke beta he'll take 10 decimal points. If present value factors are not given, we preferably restrict them to 4 decimal points, not more than 4. When they themselves given the question as such, they usually restrict it to 3 decimal points. But then if nothing is given, by default we'll take present value factors up to 4 decimal points for the purpose of calculations. But most likely these factors will be given in the question. And if they are given in the question, guys, even if those factors are wrong, you're supposed to pick up the same factors. You are not supposed to change those values. Now, moving on to the next point, beta, that is annuity. We already discussed what is annuity, guys. I said annuity is a series of cash flows, beta, where the cash flow remains constant and the time gap between two cash flows remains constant. क्या वो कुछ लिख रहा था क्या? हो गया वो? हाँ. मार खाएगा निमित सही में बोल रहा हूँ. क्या लिख रहा था फिर अभी तक? Yes, guys. लिख आगे कुछ लिख मैं वेट करता हूँ. Yes, beta. So annuity, guys, is a series of cash flows where the cash flows remains constant and the time gap also remains constant. It can either be in respect of a receivable or it can be in respect of a payable. You're investing in a debenture, it pays an amount of coupon every year as such, guys. Can that be considered as an annuity? Coupon payments. You have put 1,000 rupees in a debenture. Interest rate beta is 10%. What is the interest that they're going to give you every year? If interest rate is 10%, what is the interest amount that you will get every year? If the maturity is 10 years, are you going to get this 100 rupees for a span of 10 years? Can this be considered as an annuity? Yes. The 100 rupees receivable beta every year can be considered as an annuity because the cash flow is remaining constant and the time gap is also remaining constant. Any doubt in that part? If you are paying a loan installment beta, say monthly installment in respect of a vehicle loan, will the amount of installment remain constant? The amount of installment will remain constant every month. Even if it's a floating interest rate as such, guys, it is considered to be annuity only because till the interest rate changes, your installment amount will remain constant. Only when the interest rate is revised, your installment amount is going to change. So that is why beta here, what are we going to say? Matlab, payments as such, guys, installment is an example, which is a case of annuity. How do we compute present value of annuities? Only the concern beta here. I'm not explaining. We are not covering accumulated balance of annuity. That is not required for CA final syllabus. As I told you, it is all about valuation. And we say value as such beta, we are talking in terms of present value. We do not talk in terms of future value. If someone says what is a net worth, you will not say आज के दिन क्या है irrelevant. 5 साल बाद में पूछ, it will be 50 crores. Yes or no? So how do we compute present value of annuity? For that, you should also know that there are two types of annuities. One is annuity regular, the other one is annuity due or annuity immediate. Annuity regular beta is where the cash flows arise at the end of each period. Annuity due or immediate is where the cash flows arise at the beginning of each period. Again, we do not consider annuity due, it is not that relevant for our syllabus. Annuity due or immediate. What is more relevant beta is only annuity regular, where the cash flows arise at the end of each period. Just if someone is depositing in PPF as such beta at the beginning of every year, it will become annuity due or immediate. A lot of people, guys, in order to plan, matlab if you deposit at the beginning, you get interest for that year also. If you deposit at the end of the year, you will not get interest for that year. You will get interest from the next year. समझ में आ रहा है क्या बोल रहा हूँ? Anywhere better wherein you're saving money, if you save at the beginning, you get additional return for that year. If you save at the end of the year, you will get return only from the next year. So annuity regular अगर है बेटा, how are we supposed to compute the present value of annuity regular? So you are going to receive an amount of 10,000 rupees every year for the next 5 years. Interest rate is say beta 11%. We will be receiving an amount of 10,000 rupees every year for the next 5 years. Interest rate is 11%. So if I talk about my cash flows beta, kitne cash flows per annum? It is 10,000. How will I compute the present value of the first 10,000? How do we compute, guys, the present value of the first 10,000? अरे अभी जो पढ़ाया बेटा, can't I write 10,000 divided by 1.11? Why should I write 10,000 divided by 1.11? Why should you write? वो तो हाँ हाँ करेक्ट ही बोल रहा है, तो क्या कर रहे हो यार तुम लोग? ख्याति, you know the difference between a question and a statement, right? Why मतलब I'm questioning. To that answer cannot be हाँ हाँ करेक्ट ही है जो तू बोल रहा है. 10,000 divided by 1.11 because the cash flow is arising after 1 year. Second वाले का present value कैसे लिखूंगा? 10,000 divided by 1.11 whole square. Third one beta will become 10,000 divided by 1.11 whole cube. Next beta is 10,000 divided by 1.11 whole power 4 and 10,000 divided by 1.11 whole power 5. You add all of them as such beta, that will become the total present value. Correct, guys? Now, instead beta, if I take that 10,000 common as such, guys, first wala kya tha? 1 divided by 1.11. Second one, 1 divided by 1.11 whole square, 1.11 whole cube, whole power 4 and whole power 5. Isn't this present value factor for the first year? This is present value factor for the second year. Likewise, beta, we have present value factor till the 5th year. What's the sum total of all present value factors called as? You will directly write 10,000 multiplied by present value annuity factor. Interest rate 11%, total time period 5 years. So that is why your present value of annuity regular will always be equal to what beta? Annuity amount multiplied by your present value annuity factor. Present value annuity factor is for 1 rupee. How much is for the annuity amount? Proportionate calculation. Did you not define present value annuity factor beta in the same way? We do not write present value of annuity anywhere in the syllabus beta. We directly write present value is equal to, if the cash flows are uniform, whatever is your uniform cash flow multiplied by present value annuity factor. Just say how you did beta in capital budgeting of CA intermediate. You do not write present value of annuity regular anywhere. Don't you directly write PVCI is equal to cash flow multiplied by annuity factor. So you do not have to remember, you do not have to use the word present value of annuity regular. Just write present value is equal to whatever is your cash flow multiplied by annuity factor. Is that clear, guys? Yes or no? That is if it is annuity regular. समझ में आया? What is annuity again? थोड़े बच्चे देख ही नहीं रहे, कहाँ questions पूछेगा बोल के. What is annuity, guys? Series of cash flows where the cash flow remains constant and the time gap between two receipts or payment remains constant. You divide annuity into annuity regular and annuity due or immediate. The ones who are doing CFA साथ बेटा वहाँ पे annuity due और immediate का अलग formula देते, annuity regular का अलग formula देते, but all of these are very important, very very important. Just in case you're writing CFA साथ बेटा, कोई लिख रहा है यहाँ पे CFA level 1? Mukesh, you were writing? No. Earlier you thought no. Once you started articleship, you're like light. After CA final, after AFM. Yes, guys. So back to this. It's good beta. Once you're done with AFM as such, guys, CFA level 1 should not take much time. You have to only do economics and ethics. That might take 10 days. Matlab sit with your books properly for 10 continuous days. Baki pura you have to go through once. So on a higher side, you might be done with the preparation in 15 to 20 days. But you should be interested in this subject. Only then you might end up finishing all of that in 20 days. Just in case you want to write a such beta. Telling you. So ये annuity regular था बेटा. If you were to arrive at the present value of annuity immediate, यही नहीं हो रहा है सर, पढ़ना कहाँ और पढ़े. What's the difference between annuity regular and annuity immediate? Cash flows are now arising at the beginning of each period. So when I say cash flow of year 1, beta, is it at the beginning of year 1 or end of year 1? Beginning of year 1. Beginning of year 1 का present value क्या रहेगा guys? Same 10,000. If you're receiving something tomorrow as such, beta, the present value of that today will be 10,000 only. You do not have to worry about that one day discounting. If you're receiving something at the beginning of year 2 as such, guys, isn't that same as end of year 1? You are going to discount that for how many periods? One period only. If you are receiving something as such, guys, at the beginning of year 3, that is as good as end of year 2. Likewise, if you're receiving something beta at the beginning of year 4, that will be 10,000 divided by what beta? 1.11 whole power 3. If you're receiving something at the beginning of year 5, that is as good as end of year 4. So you're going to write 10,000 divided by 1.11 whole power 4. समझ में आ रहा है? If you add all of these values, you will obviously get the present value of annuity immediate. Now, to do that, beta, you write 10,000. If I take 10,000 common, isn't that 1 plus? First wala 1 रहेगा, हाँ या ना guys? What will be the second one? 1 divided by 1.1. 1 divided by 1.1 whole square, 1.11 whole cube. क्या कर रहा हो यार, 1 को भी ऐसे लिख रहा हूँ. हाँ. समझ जा रहे हो ना बेटा तुम लोग? Oh my god. So these are the values, guys. Are we clear? Can I also write this as 10,000 into 1.11 divide and multiplied by 1.11? Can we do that? एक 1.11 multiply कर रहा हूँ बेटा, एक divide कर रहा हूँ ताकि answer should remain same. What will happen बेटा? This will become 1 divided by 1.11 whole cube. The next one will become 1 divided by 1.11 whole power 4. The last one will become 1 divided by 1.11 whole power. This is when you divide and multiply by what? 1.11. So once you divide and multiply by 1.11 as such, guys, what will this become better? Present value annuity factor. So that is 10,000 into 1.11 into present value annuity factor at 11% for 5 years. I can write that as 1 plus R, that is rate of interest, into annuity amount into present value annuity factor. This is how beta you arrive at present value of annuity immediate. Will we be needing this? Most likely no. Even if they ask present value of annuity immediate as such, beta, ignore 5 years, take 4 years and add the first 10,000. 4 years beta is present value of annuity regular only. You compute normally the present value of annuity regular. To that you add another 10,000 rupees. That will become present value of annuity immediate. Are we clear? Yes or no, guys? लिखो बेटा. ये सब बहुत काम में आते हैं बेटा बाद में. Can't help it if you've done it in foundation level also. ठीक है. थोड़े बच्चे शक्ल तो ऐसे बना रहे जैसे मैथ्स में 100 आया. Write down. क्या विनय? Present value. अभी annuity बेटा सारे रहेंगे. Annuity is a series of cash flows. Annuity is a series of cash flows. Annuity is series of cash flows. Where the cash flows remain constant. Where the cash flows remain constant. Where the cash flows remain constant. And the time gap between two receipts or payment. And the time gap between two receipts or payments. The time gap between two receipts or payment. Two receipts or payments also remain constant. The time gap between two receipts or payments also remain constant. Next line. If the cash flows arise, if the cash flows arise, if the cash flows arise at the end of each period, at the end of each period, if the cash flows arise at the end of each period, it is considered to be annuity, it is considered to be annuity regular. If the cash flows arise at the end of each period, it is considered to be annuity regular. If the cash flows arise at the beginning of each period, if the cash flows arise at the beginning of each period, beginning of each period, it is considered to be annuity due or immediate. Considered to be annuity due or immediate. Annuity due or immediate. Example. Example. Annual coupon payments of a debenture. Annual coupon payments of a debenture. Annual coupon payments of a debenture. Housing loan repayments. Housing loan repayments. Housing loan repayments. Annual coupon payments, housing loan repayments. Next better. Present value of annuity regular. Present value of annuity regular. Copy this, guys. Amount 10,000, 5 years time period, interest rate 11%. Did you write this, guys? ये लिखो बेटा उसके नीचे का. Hmm? Write the entire thing better. That present value of annuity regular is equal to annuity amount into PVAF. So if the cash flows are uniform, you directly write uniform cash flow multiplied by present value annuity factor to compute the present value of those cash flows. Are we all done, guys? Yes or no? So that was present value of annuity regular. Now present value of annuity immediate. Present value of annuity immediate. You can copy this. Online students, I hope you're all writing better. Make a note of this, guys. लिख लिया ये भी पूरा. Did you copy that table, guys? Yes, but are we all done? So to compute, so we did three present values better so far. One is present value of a single cash flow. In order to arrive at present value of a single cash flow, what will you write? Future value divided by 1 plus r whole power n. Or you can also write cash flow multiplied by present value factor, not present value annuity factor. If it's a single cash flow, you will directly multiply that cash flow with present value factor. If it is annuity regular, you will multiply your annuity amount with present value annuity factor. And if it is annuity immediate, you will write 1 plus r into annuity amount into present value annuity factor. This is how better you arrive at the present values. Now, Yasha will tell us how to compute present value of a perpetuity. कभी सुनी बेटा perpetuity के बारे में? सुनी थी, भूल भी गई ना. You should not hold on to past, sir. Yes, beta Yasha. Present, what is perpetuity? Cash flows are perpetual, that is perpetuity. तेरी बाजू वाली नीचे देख रही. What's your name, beta? Pranati. I won't ask questions, don't worry. ठीक है. Do you know perpetuity? No idea, same one. Huh. Yes, beta Krisha. How do you compute present value of perpetuity? So guys, correct. Perpetuity, guys, is nothing but a series of cash flows where there is no defined end point. It is considered to be a special case of annuity. Now, we do have a lot of cases of perpetuity better because the entire, as I told you, syllabus deals with valuation. Equity share, will that be a redeemable security or will that be a perpetual security? Wherever you have to value any business, wherever you have to value any instrument better like equity share, you will have to use the concept of perpetuity. So if you have series of cash flows with no defined end point as such, guys, you will consider that to be a perpetuity. Because there is no end point, there is obviously no way of you computing accumulated balance or future value. The only thing that can be computed is present value. In case of a perpetuity, I can only compute present value. अब जैसे बेटा ICI has some certain prize fund, किसी के नाम पे एक रहता, वो every year they keep giving those awards as such, guys. Whoever wanted to ensure better that an award is to be given in his name as such, guys, he must have contributed an amount so that the income out of that fund every year will be sufficient to fund that award. The principal corpus is not going to go anywhere. Imagine better that you donate an amount of 2 lakh rupees. On that 2 lakhs, they're making an interest income of say 20,000 every year. They're using only that income portion of 20,000 rupees as such better to fund those prizes. Is there anything happening to that 2 lakh rupees? Nothing. That will still remain intact. So don't you think you will be able to generate the stream of cash flows forever? Ha ya na? When you're not withdrawing any of your principal portion as such, guys, or your principal portion keeps increasing, outstanding balance keeps increasing year after year, it will definitely become a case of perpetuity. If the principal portion keeps reducing year after year as such, but at some point of time, the total balance will come down to 0. Just say what we did better in case of PVAF. Wasn't the outstanding balance coming down every year? In the beginning, it was 3.0373, then it became 2.4018. If the balances reduce year after year, it cannot be a case of perpetuity. If the balances are constant or the balances are only increasing year after year, it will become a case of perpetuity. You will not be able to compute accumulated balance. The only thing that you will compute better is present value. Under this also better, present perpetuity, maybe there are two cases. One is a constant perpetuity, the other one is a constant growth perpetuity. When you say constant perpetuity, the cash flows will remain constant. Cash flows are not going to change. Constant growth perpetuity mein beta, cash flows will keep increasing but at a constant rate. Your cash flows as such beta will increase but at a constant rate. A majority of you beta did this in the form of cost of equity, dividend discount model. To compute cost of equity, you write D by P naught or you write beta D1 by, you write D1 by K minus G will give us the price of an instrument beta. D1 by P naught plus growth rate will give us cost of equity. That is nothing but an application of perpetuity. Present value of constant perpetuity, present value of constant growth perpetuity. समझ में आ रहा perpetuity का मतलब क्या है? Now imagine guys that you were to receive a cash flow of 1,000 rupees every year. There is no defined end point beta and the rate of interest applicable, required rate of return is 9% per annum. If you were to receive an amount of 1,000 rupees every year with a required rate of return of 9%, let me just finish all of these basics better so that we can start off the main topic. So 1,000 rupees if you were to receive beta every year. After this, we are also going to cover the aspects of NPV, IRR, modified internal rate of return. All of those things are important. अब जैसे वो YTM compute करोगे बोलेगा बेटा using IRR. You should know how to compute IRR. So let us say better that the cash flow first year is 1,000, second year 1,000, third year 1,000, fourth year 1,000, and will this end? How will I compute the present value of the first 1,000 rupees? The present value of the first 1,000 beta will be 1,000 divided by 1.09. What's the present value of the second 1,000 rupees? 1,000 divided by 1.09 whole square. Third 1,000, 1,000 divided by 1.09 whole cube, 1,000 divided by 1.09 whole power 4. So on guys, with no defined endpoint. To add all of these values as such guys, we use sum of infinite terms of a geometric progression. You do not have to remember geometric progression. You do not need knowledge of geometric progression. It is only for those who are interested. The formula beta sum of infinite terms under geometric progression is first term divided by 1 minus common ratio. All of this was there in your foundation. Formula koi nahi puchega beta derivation. It is only for your understanding. If you know how the formulas are derived as such, it becomes easier when the questions are way too complex. सो यहां पे बेटा फर्स्ट टर्म क्या है 1000 divided by 1.09. What is your common ratio? Common ratio, guys, is 1 divided by 1.09. If I replace that here, but I'll write 1000 divided by 1.09 in the numerator divided by 1 minus 1.09. If I take that LCM, beta, numerator will become 1000 by 1.09, denominator 1.09 minus 1 by 1.09. Can I strike this? बचेगा क्या बेटा 1000 divided by 0.09. That's the formula that we learn. Cash flow divided by required rate of return. To compute the present value of a constant perpetuity, you will write cash flow divided by required rate of return. So if I were to arrive at price of an equity share which is paying a constant amount of dividend every year, will that become a case of constant perpetuity? Dividend realistic नहीं होता बेटा ऐसा. Just let us say theoretically there is a company that is paying the same amount of dividend every year. If the dividend remains constant every year, can I write the price of that equity share as dividend amount divided by cost of equity? R% will be changed with cost of equity. Required rate of return, guys, in respect of an equity instrument, you term it as cost of equity. वैसे ही what if you have an irredeemable debenture which pays a constant amount of interest every year? What will become the price? What will be the price of that irredeemable debenture? Interest amount divided by whatever is your required rate of return as such, guys. Are we clear? Whatever is the required rate of return from an investor's perspective, that better will determine the value of a constant perpetuity. So if the cash flows are constant, you're directly going to write cash flow divided by R%. Any doubt in this? Yes or no, guys? If the cash flows increase at a constant rate, usko kya bolte hai? Constant. If the cash flows are increasing at a constant rate, you term it as a constant growth perpetuity. सब आता है बेटा एग्जाम में as a 5 marker or an 8 marker question. They will ask us to value equity share where the growth rate is not constant in the initial years, but the growth rate stabilizes later. You had 1 or 2 questions like that in CA intermediate also. But everything same, guys. Cash flow of year 1, I make it as 1000. Thereafter, let us say that your cash flows will keep increasing at a rate of 7% every year. And the required rate of return, last वाले में कितना लिया था? 9%. Your required rate of return is 9%, but the growth rate in cash flow beta is 7%. Every year my cash flows will keep increasing by 7%. So what will be the cash flow of year 1 beta? 1000 rupees. What will be the cash flow of year 2? 1000 plus 7%, that is 1070. ठीक है बेटा? ब्लू शर्ट तेरा नाम भूल गया मैं. हाँ हाँ वही ठीक है, नाम भूल गया तेरा, नाम ये छोड़ी है. हाँ ध्रुव. सो 1000 into 1.07, करेक्ट बेटा ध्रुव? थर्ड ईयर में क्या रहेगा कैश फ्लो? 1000 plus 7% बेटा 1000 into 1.07 only. What will be the cash flow in the third year? Can I write that as 1000 into 1.07 whole square? 1070 in turn will increase by 7%. That will become 1000 into 1.07 whole square. What will be the cash flow in the fourth year? 1070 into 1.07 whole cube. अब बेटा present value compute करना है. What will be the present value of the first cash flow? 1000 divided by 1.09. What will be the present value of the second cash flow? 1000 into 1.07 but divided by 1.09 whole square. Next beta 1000 into 1.07 whole square by 1.09 whole cube. 1000 into 1.07 whole cube divided by 1.09 whole power 4, so on. This is again in geometric progression. The first term is what beta here? 1000 divided by 1.09. Common ratio कितना है? 1.07 divided by 1.09. Common ratio under ratio of two any consecutive terms. Second term divided by first term. Third term divided by second term. सर ये फॉर्मूला कहाँ से आया? A by 1 minus R. फाउंडेशन नोट्स में देखो बेटा, एक्सप्लेन. where n tends to infinity as such, guys. You must have learned a into r power n minus 1 by r minus 1, or if r is less than 1, a into 1 minus r power n by 1 minus. When n tends to infinity, beta, r power, ये जो अपना value रहता common ratio, if it is less than 1, the value will come down to 0. You will be left with a by 1 minus r. So when we do this, beta, sum of infinite terms here, what will I write? A by 1 minus r. So first term is 1000 divided by 1.09. Common ratio की जगह क्या लिखूं? 1.07 divided by 1.09. What will this become, beta? In the numerator, I have 1000 divided by 1.09. Denominator, if I take an LCM, 1.09 minus 1.07 divided by, can I strike that 1.09? What will I be left with? 1000 divided by 0.02. Can I also write that as 1000 divided by r percent minus g percent? Therefore, the present value of constant growth perpetuity, guys, is cash flow of year 1. Most important. Constant perpetuity mein does not matter whether you write CF1, CF2, CF3, because cash flow is remaining constant. यहाँ पे 1000 rupees is not cash flow of year 2 or year 3. It is only cash flow of year 1 divided by r percent minus g percent. So if you were to value an equity share which is paying a constant, which is paying a dividend which are growing at a constant rate, the formula will become d1 by ke minus g. This is what you've learned as price of an equity share. समझ में आ रहा है? If cash flows are increasing at a constant rate, how do you compute present value? CF1 divided by r percent minus g percent. If the cash flows are remaining constant, you will write present value as CF, cash flow divided by r percent. दोनों बहुत important है, याद रखना. I can use this formula, guys, only if the growth rate is constant, right from year 1. If the growth rate is constant after 5 years, ऐसे बेटा, ये समझ में आया नहीं आया अभी? If I'm writing P naught, I will write cash flow of year 1 divided by r percent minus g percent. P naught मतलब price prevailing today. I can also write P1 as CF2 divided by r percent minus g percent. If you get confused, replace 0 with years. Price 2023, will that become cash flow of 2024 divided by r percent minus g percent? Yes or no? एक साल बाद में when you are valuing beta, say P2024, won't that become cash flow of 2025 divided by r percent minus g percent? When you are valuing it again after one more year, P2, what will you write? CF3 divided by r percent. Whenever you are valuing beta, does not matter. You're supposed to take cash flow from which year? इसके बाद में I'll also talk about X dividend quotation, cum dividend quotation, X interest quotation, cum interest quotation. Whatever we are doing as such beta is all on X basis or cum basis? X interest basis, X dividend basis. That is also important to attend. यहाँ तक पहले ये समझ में आ रहा है? I'll talk about those valuations also, guys. Are you all clear about the present value of a constant perpetuity and constant growth perpetuity? Yes or no, guys? Well, right? Write down बेटा side heading. पहले ही लिखना start कर दे रही. Side heading बेटा perpetuity. Perpetuity. Perpetuity is a series of cash flows. Perpetuity is a series of cash flows. Perpetuity is series of cash flows. Series of cash flows with no defined endpoint. With no defined endpoint. निहारिका बहरी हो गई क्या तू? He's shouting so much. I thought तू बहरी हो गई बोल के. तेरा नाम क्या हीरो? लक्ष्य. So क्या हुआ कृष्णा, ऐसा देख रही है तू? Yes, guys, perpetuity is a series of cash flows with no defined endpoint. If the cash flows remain constant, if the cash flows remain constant, if the cash flows remain constant, guys, one more small part, beta. 2509 वाइट कलर की क्रेटा किसकी है? हाँ, मेरी गाड़ी के बाजू मत लगाओ यार, वहाँ पे दूसरी गाड़ी आती, मेरी अभी नहीं, अभी 9:30 जब जा रहा, जस्ट रिमेंबर दैट यू कैन पार्क इट एल्सवेयर, और बाहर भी जो एक दो तीन शटर बंद रहते हैं उसके सामने लगा आराम से। मैडम मेरे को डांट रहे, उनकी पार्किंग की जगह कौन ले रहा बोल के। यस गाइस, सो क्या लिखे बेटा? इफ द कैश फ्लोज रिमेन कांस्टेंट, इट इज टर्म्ड एज अ कांस्टेंट परपेचुटी, it is termed as a constant perpetuity, it is termed as a constant perpetuity. If the cash flows increase at a constant rate, if the cash flows increase at a constant rate, if the cash flows increase at a constant rate, it is termed as a, if the cash flows increase at a constant rate, it is termed as constant growth perpetuity, constant growth perpetuity. Now write down citing beta. Present value of constant perpetuity. Present value of constant perpetuity. And start writing this, guys. Write till that beta. Cash flow by R%. Present value of a constant perpetuity, guys, will be cash flow divided by R%. लिख लिया वहां तक? Write a note below that beta. An equity share paying constant dividends every year. An equity share paying constant dividends every year. Equity share paying constant dividends every year. The present value will be, present value will be dividend divided by cost of equity, D divided by KE. Present value will be D divided by KE, dividend by cost of equity. Similarly, irredeemable debenture paying a constant amount of interest, irredeemable debenture paying a constant amount of interest, irredeemable debenture paying a constant amount of interest, value will be irredeemable debenture paying a constant amount of interest, value will be कितना बेटा, interest amount divided by cost of debt, interest amount divided by required rate of return लिखो बेटा, interest amount divided by required rate of return, interest amount divided by required rate of return. ठीक है. Now next heading, present value of constant growth perpetuity. वो कॉस्ट ऑफ डेट के लिए बेटा, वैल्यूएशन के लिए नहीं लेते. आई टॉक अबाउट दैट. Present value cannot be based on net of tax cash flows. Present value will be based on pre-tax cash flows from an investor's perspective. His net return will be post-tax after that. Value करते समय we cannot exclude the component of tax. Write down better next heading and start copying this. Present value of constant growth perpetuity. Present value of constant growth perpetuity. Done with this. सायराम हो गया. It is CF1 divided by R% minus G%. That is cash flow of year 1. Write down with the next line. The value of an equity share. Next line. The value of an equity share. The value of an equity share whose dividends grow at a constant rate. Whose dividends grow at a constant rate. The value of an equity share whose dividends grow at a constant rate will be D1 divided by KE minus G. Value of an equity share whose dividends grow at a constant rate will be D1 divided by KE minus G. KE minus G. Now we can use present value of constant growth perpetuity का formula guys if and only if the growth rate is less than the required rate of return. Why will the growth rate be? Why will the interest rate be more than? Think about what you're talking. Just let me write. So here guys I'm telling what about this is if your required rate of return as such guys is 15%, the growth rate should be less than 15%. Only then as such beta I will be able to use the formula of constant growth perpetuity. Otherwise I cannot use the formula of constant growth perpetuity. What is your doubt now? Tell me. If you're paying me dividend, the rate of dividend should be lesser than the if your organization is growing at a rate of 20% year after year, can your dividends also grow at the rate of 20% year after year? It cannot be more, but can it grow at the rate of 20%? Say you spend 30% of your income, consider that as drawings, dividend. Next year if your salary is increasing by 20%, don't you think you can also increase your spending by 20%? Uske next year if your salary is increasing by 20%, can you increase your spending by 20%? Yes or no? Guys, समझ में आ रहा है क्या बोल रहा हूँ? I'm not talking about the ability of the company to make return. I know that the company is growing at a rate of 20%. If a company is growing at a rate of 20%, the company's dividends also can grow at a rate of 20%. What I'm talking about, beta, is a comparison of that growth rate with required rate of return. Required rate of return is your expectation of return based on risk. That has nothing to do with what is the actual return that is being generated. A company whose actual return beta is 100% does not mean required rate of return is 100%. Required rate of return is always based on risk. If you have invested in Tata Motors and it has decreased by 30%, if I ask you what is your required rate of return, will you tell me minus 30%? I'm investing today in Tata Motors, my required rate of return is minus 30. Why minus 30? Because the company has decreased by 30%. So, required rate of return is not based on actual return. Required rate of return is based on risk that is involved in the security. What I'm trying to tell you here is if that required rate of return beta is less and the growth rate is more, you will not be able to use constant growth perpetuity formula. The drawback here beta lies in sum of infinite terms of geometric progression. This formula can be used guys only if r is less than 1. R lies between -1 to +1. अभी अपन common ratio कैसे लिखे थे? Did we not write 1.07 by 1.09? Isn't that 1 plus growth rate divided by 1 plus required rate of return? This will be less than 1 only if growth rate is less than required rate of return. If growth rate is more than required rate of return is such beta, then common ratio will not be less than 1. Sum of infinite terms का जो formula है, that derivation is not possible. There are ways of valuing the company, but I cannot use present value of constant growth perpetuity if growth rate is more than required rate of return. But it is not even realistic, guys. Which company can grow at such an abnormal rate, guys, for an indefinite period? Every company has something called as variable growth. In the initial years as such, guys, companies will undoubtedly grow at a very high rate. There can be entities growing at a rate of 20% as such beta growing at a rate of 18%. But for how long? It might be for 5 years, it might be for 10 years. Consider a company like Apple also as such, guys. Abhi recently report में they've made it very clear. We are launching new products, but do not expect the growth potential of these products to be the same as iPhone. There cannot be any product that will match the growth potential of iPhone. Companies cannot continue to grow at such an abnormal rate year after year. At some point of time, growth rate will come down. Can you expect a such beta very large entity to grow at a rate of 20%, 30% year after year? Smaller entities, can they grow at a rate of 20%? Many small cap companies beta have a CAGR of 25%. But that is only till they become a larger entity. Once they become a larger entity as such beta, the growth rate has to come. Just say yesterday we took the example of developing country and developed country as such beta. When India reaches that stage of developed economy as such beta, don't you think the growth rate will reduce a little? Thanks to our population as such beta, there will still be consumption driven growth, no doubt about it. It will not come down to like growth rate of US 1%, 2%. They say China is also better developed, but then there is population. Consumption driven growth hamesha rahega. India has that advantage, consumption driven growth. Population is very high. Are we clear about this? So what I'm trying to tell you beta is that this formula can be used if and only if growth rate is less than your required rate of return. If growth rate is not less than your required rate of return, we will not be able to use present value of constant growth perpetuity. Sir, what if there is variable growth? I'll explain that also. अभी के लिए ये समझ में आया? Write down beta note. The formula of constant growth perpetuity can be used. The formula of constant growth perpetuity can be used. Formula of constant growth perpetuity can be used. Can be used only when formula of constant growth perpetuity can be used only when the growth rate is less than growth rate is less than the required rate of return. Growth rate is less than the required rate of return. Required rate of return. Are we clear, guys? Yes or no? So present values में क्या क्या किया बेटा? If it is single cash flow, how are you going to write present value? Whatever is your cash flow beta into present value factor, not annuity factor. Future value divided by 1 plus r whole power n, or cash flow multiplied by present value factor. One and the same. Hi or na, guys? If it is present value of annuity as such beta, what will you write? Whatever is your annuity amount, guys, multiplied by present value annuity factor. If it is annuity immediate, you're going to multiply this by 1 plus r. ये लिखाऊंगा बेटा मैं, टेंशन मत लो, पूरा summary. Perpetuity as such beta, how will you compute present value? It will be cash flow divided by r%. If it is constant growth perpetuity, cash flow divided by r% minus g%. Cash flow of year 1 divided by r% beta minus g%. Are we clear? We'll continue tomorrow beta with the concept of variable growth rate. If there is variable growth rate, how are we supposed to arrive at valuations? ठीक है? चलो बेटा, end of today's session. See you guys tomorrow. Bye bye. Online students, end of the session beta. See you guys tomorrow. क्या क्या? Yeah, are there any people guys in this class who have their BCom exams in the coming week? कितने लोग हैं who have BCom exams in the coming week guys? अभी Monday से start हो रहे हैं ना? The exams are at 9:30. हाँ 9:30. All right बेटा, ठीक है, सोच के बोलता हूँ. Bye. चलो निकलो guys. Online students, bye bye बेटा. Yeah.